What's your view on where this market is headed for the short term?
Well, we are still seeing a bond-dominated market at the moment. If you look at the bond trading yesterday, it was around 350 million worth compared to about 115 million worth in equities. So the market is still skewed towards the fixed income market. Investors are still looking that side. But on the equities market, we are seeing a certain level of bargain hunting by foreign investors. Foreign investors took about 71% of total turnover yesterday, and they sold another 16 or so percent, compared to about 12% by the local investor. That goes to show that the local investor still seems to be shying away from the equities market. The foreign investor is taking advantage of the fact that we are below the 3,000 mark, and they are coming in strong and buying at those shares that they feel are underpriced at the moment and looking for bargains across the board.
Well, when it comes to the banking sector, let's throw some of the spotlight there. I mean, for the third quarter, we've seen the banking stocks have been one of the worst performers, with all 10 listed stocks ending the quarter lower. How are you feeling about the banking sector moving forward, especially given that we're anticipating results to start trickling in from that end?
I think the fact that we are seeing the slowdown is an anticipation of the third quarter results. Normally, because investors are right now looking at the market with uncertainty, and the pointer of the market is normally the financial sector. So what investors are really doing at the moment is that they feel that there has been a slowdown in growth. I don't think it's that much, but yes, we do expect that at the moment we are seeing a bit of a stagnation in terms of the economy. The government hasn't started spending much from the last budget, so I don't think there's been that much influx of funds into the economy, which means the banking sector may have slowed down. As you saw in the first half results, we did see that a lot of banks were showing growth in their bad loan books, and so this is also causing a bit of jitters on investors' side as to how the banks have actually handled their loan books. And so going forward, people are now just looking to see if things are slowing down or if they should be worried about how the economy is going.
Well, the Central Bank of Kenya certainly seems to be unruffled by the longer-term risks that could face the sector as a whole. Instead, it's focused on a single metric, that being the interest rates charged to customers. What kind of progress are we seeing on that front, where banks have been pretty resistant to lowering their interest rates in tandem with the lowering of the central bank's benchmark rate as well?
Well, in as much as they haven't lowered their interest rates, what they have done is they have continued lending, which is a good thing for the economy. It means that SMEs are still able to access funds. The corporates going towards bonds or fixed income on the market, and also Chumi going for a debenture, probably because of the uncertainty about their performance. I think on the whole, we are seeing the government is trying to spur the economy, and they see that coming through lower interest rates, through getting banks to continue lending, through trying to get people to continue borrowing. And so as long as banks are lending and they're still expanding, because we haven't seen a letdown in the expansion by most of the commercial banks. So even though they haven't cut down on their interest rates, we do still hope that the fact that they are still lending heavily will continue to help the economy remain stable.
Not only are they lending more heavily, but they're becoming more complex institutions themselves. I mean, there is this recognition of a growing complexity of the Kenyan banking sector as it extends its reach to other domestic financial subsectors and across East Africa as well. So with that being the playing field, which bank do you actually have your eye on in terms of being able to really mitigate the risk while it extends its business moving forward?
Well, I don't know, my fellow analysts tell me I like the equity model, but probably because I've found that they have done very well. They have the funds. They have managed to show that they can grow and continue to reach the unbanked. And seeing that there is a huge unbanked population in Eastern Central Africa, Equity's model has really been working for them. Of course, their loan books have suffered a little bit, but that would be expected with the slowdown in the economy. But at the same time, we've been seeing Barclays Bank and KCB hot on their heels and also going for the same sort of model. And most of the banks are going for the new model where they're being called financial supermarkets, where you walk in and you can get all the different products under one roof. And so Equity has already bought an investment bank, so they're going into investment banking, basically directed at those SMEs that have grown bigger with time. We've seen Cooperative Bank go the same way. So I think on the whole, what we are seeing is banks diversifying their products and trying to reach out to a whole wider range of, with a whole wider range of products, yes.
Mm-hmm. Looking at Equity, seeing that it is your favorite right now, I mean, we know that it has a pretty risky market that it caters to in terms of the unbanked sector that it had targeted quite aggressively. You've mentioned now the SME sector as well. Are you convinced and are you satisfied with the adequacy of provisioning that's been made on their end?
Well, the thing is that they lend to a lot of, not just SMEs, but also the little man down there, the salons and the guys who do the haircuts and stuff. And so these loans are turned around over and over in a very short period of time. And so I think what they have done is realize that these guys do pay up. They don't have that risk that comes with lending to the big borrowers who did default heavily in the earlier, in the 90s and the 80s and cost banks a lot of problems. So I think at the end of the day, Equity is going to collect. They may have problems, a slowdown in collection, but I think the fact that they also have all the money that they got from Helios, to boost their base capital, then they are really able to sustain, a bit of a slowdown and manage to go forward as strong as they have been in the last 2 years.